Warning! What you're about to see is a Tesla Model 3 hitting a deer. The content might not be suitable for all audiences. User discretion is advised. This channel is for educational purposes only. You and you alone are responsible for your investment decisions. Yesterday was a bloodbath in the US stock market, with the Dow suffering the worst session in almost a year. Unfortunately, like that deer, there are a bunch of people getting slaughtered. Last week I came out of retirement to document my journey from $0 to 7 figures. I hustled a bit after hours and made $482 on Uber, another $75 on a side job for a total of $557 to invest. I would like to stress that this income was generated after normal hours in my own time and that it could easily have been possible to work another full-time job. So let's talk about how to get that first trade done. I've had a brokerage account for forever, and so I don't need to start one, but I just want to talk about how to select one. Now, one thing to consider is your fees and commissions. Look at the brokers, see if they're competitive. We live in an era now where you can basically trade stocks for free. Look at the investment options. Do they offer bonds and ETFs, mutual funds? Some brokers will have IPOs, initial public offerings. Robinhood, for instance, just started out with stocks, and I believe they added options. But your more robust brokerage houses are going to offer more things. You also need to look at the trading platform. Are you comfortable with what it's showing? Is there a mobile app so that you can do online trades? What's the customer service look like? And for me, huge is security. Is the platform secure? Are they time tested? Have they been around for a while? And then the account minimums. If you only have $500, but they require $5,000 to start an account, that's an issue. So one of the bigger things too is what type of investment resources are available. If you're a new investor, that could be incredibly valuable to you. I'm going to close my eyes and envision an 18-year-old man, a person that had hair and not a gray beard, and his first trade who actually lost about $500 on. And that was because back then commissions were about $50 each way, so it was $100. I invested $1,000 in my initial trade, and then I picked something that went down and down and down and sold it before I lost my butt. I don't want that to happen. So my first selection, I want it to be a positive experience. A lot of my peers and friends, they'll do these penny stocks or really aggressive trades. They'll lose big their first time, and then they never want to invest again. So here's what I'm going to do. Go out to Google. I'm going to type SPY quote and then Yahoo because I want to see that quote on Yahoo. I see today we're bouncing back, but let me pull some footage when I actually made the trade yesterday. What type of asset am I actually buying when I purchase a share of SPY? Well, if you click on profile in this Yahoo Finance area, it'll give you a description. And it says the trust seeks to achieve its investment objective by holding a portfolio of common stocks that are included in the index. So the index is the S&P 500. It is a market capitalization weighted index of 500 leading publicly traded companies in the US. If you go back to Yahoo and click holdings on the left, you'll see exactly what is included within this index fund. Microsoft, Apple, Nvidia, Amazon, Meta, Google, Berkshire Hathaway, Broadcom, Tesla. And then on the right there, it shows the percentages of all those. Now, those top 10 holdings represent a third of SPY. So although there is some inherent diversification, you are heavy in technology when you buy this index fund. And that brings up an incredibly important point, examining risk. What I like to do is go out to performance on the left and look at the historical returns of a particular investment. So from 94 on up to 99, we were pulling 20+% annually returns. Then we hit the dot-com bust and so on. In 2008, we had the financial crisis, 37% down. So you got to think about that. Are you okay with losing money? Because if you play this game, you inherently could lose everything. So in my opinion, the greater risk is not being in the market at all. If you look at the all-time chart for the SPY, it's incredible. It's gone nothing but up if you're a long-term holder. It's the benchmark that all the professionals compare their returns to. Now I'm going to buy one share of SPY, and just keep in mind that depending on what brokerage house you're using, it could look drastically different. Here I can buy or sell stock. I put the quantity here and then the ticker symbol. And then I can do, the order type can be either a limit order saying, hey, I'm only willing to pay this price. If it hits that price, go ahead and buy that one share. Or I could do a market order where it just buys it. Now, I typically only use limit orders because I want to know what I'm going to pay. And then if I wanted to expire at the end of the day, then I would select day. If I want it to go on day after day, then I would select good till canceled. I'm reviewing it. If this goes through, that's what I'm going to pay, $490.80. Place the order, and now I wait. Order did fill. I now own one share of SPY at $490.75. All right, so I own my first stock for the $1 Million Challenge, one share of SPY. Now here's how I'm going to play this. I'm going to go out, I'm going to hustle for another week. If the SPY goes down, I'm going to go ahead and buy another share, assuming I make that much. If it goes up, I'm going to go ahead and sell it and log that profit. Now, the way I can do that is to set a limit order, good till canceled, at a higher price. Let me show you what that looks like. So I'm on my trade screen, and I don't want to buy. This time I'm going to sell the one share that I own. SPY is the ticker. I'm going to set up a limit order, and here's my limit price, $503.50. I'm going to do it good till canceled because it could take a day, a week, a month, a year. I don't know how long it's going to take. I'm reviewing what I've set up, and I'm going to go ahead and place this order. Now I have money working for me instead of working for my money. It's a powerful concept once it's fully understood. Until we meet again.